Hey guys, thank you so much for watching this video. Please give us a call if you guys are looking to improve your credit score, lower your car payment, buy a car, trade in a car. If you're looking to purchase your first home, if you're looking to purchase a rental property, we can help you. Give us a call today, 877-205-7771. Talk to you guys soon, and thanks again.
Hello everyone, this is Calvin Russell, CEO and founder of 850 Club Credit Consultation. Hope everyone's doing well today. Today we're going to talk about the number one thing that people do wrong when they file their taxes. I'm not talking about if you do it yourself. You haven't anybody do it, okay? And that's taking too many deductions to bring your income down to try to get a refund, okay? Here's the thing. I know a lot of people wait on refunds. You probably have people waiting on refunds that you promised to pay back or something. Or in general, you just want to make sure that you don't have to pay a certain amount into taxes. Listen, we all get it, right? The problem is, especially if you're self-employed and side hustles that you've made. Number one, you got to understand when you do business, with a company that's like a major brand, like Uber, DoorDash, or if you're, let's just stick to like companies like those, right? They're going to report your income that you made from them as an expense to the company, okay? So they're going to say, hey, listen, we provided our brand, our app, people downloaded the app, they requested this person drive them, we paid the driver, okay? That means we lost a certain amount of money that was an expense to us. They report that, okay? And then everything that's reported has, of course, your either social or your EIN number that's attached to it, right? Depending, most people use their social or whatever. And then so it has a social and how much money they paid. That is on their expense sheet. So when they send that, the IRS is waiting on, that's one half of the equation. They're waiting on your half of the equation, which is where you get something from Uber, DoorDash, whatever. You make your side money from a major company, major brand. They're waiting on you to then turn in your half to say, yes, I made this amount of money, but here are my, list of expenses. And of course, because of that, these are now my deductions, okay? Again, there's nothing wrong with deductions, but there's a little bit too much when people start lying. Well, I guess it kind of falls into lies, right? But even if everything is 100% accurate. But you don't want to make it seem like, yeah, I made X amount of dollars, 20,000, but with all my expenses and deductions, I only made about 5,000. And of course, to avoid having to pay tax on that, okay? Did you know that the IRS, after you file taxes after a certain period of years, now again, I'm not a CPA, but this is of course information, you can look this information up. And I'm not advising that you do either or, but over a certain period of time, if you have a business and you're always losing money in that business or it's not making a certain amount, they will consider that a hobby, okay? So you gotta be careful. This is what you gotta talk to your, your tax person about. Also, my personal opinion, if you're gonna always have these side hustles or things you do on the side and you're making $1,000 a year, $1,500 a year, this is something a year, okay? So of course, most people end up making that from doing something on the side. If you plan on making more money like that, I suggest you don't go to one of these, these big name brand places like, H&R Block, Jackson Hewitt, all these places. You need to actually talk directly to someone. A lot of these people, they have their training, but to me it's very basic. And not only that, you want to have someone where they make sure that you stay, of course, in compliance, make sure things make sense, but they also want to make sure that you maximize your refund. Most of these places are used to W-2s, okay? So it's nothing wrong with a W-2, but when you start transitioning to something that you do on the side, you may need to ask questions about certain things, because a lot of people don't know, like if you're driving for Uber, all maintenance, plays a role, gas receipts, miles, because again, you did that. But let's be honest, if you're driving for Uber, every time you're in the car is not for Uber. So that gas is not, it plays a role to that versus, for an example, let's say if you have an office space, right? And you have an internet bill for that office space, that's 100% deductible because that is 100% business. But if you say, hey, I put $20 of gas in my car and I did some Uber, yeah, but of course that $20 also takes for you to go from not doing Uber to on your way home. You guys get where this is going? So just make sure you ask the right questions. Talk to a CPA, not your friend, okay? I'm just saying talk to a person that may be that is like an accountant or something like that, a CPA, people that are not just working at these big brand places. Now, I'm not saying that they're going to always have the answers, but you want to make sure that people are reputable, not just somebody who just gets you a refund. And because again, that leads to bigger things. For example, if you're trying to get a personal loan, okay? I have a friend of mine who is making very good money, like $11,000 a month, all right? And she has a hair salon. Long story short, this particular person, she got bad advice. Someone told her not to file taxes for the last 2 years. Guess what? Now she needs money to try to expand her business, but guess what? Now that the bank wants to give her money, her credit's there because she worked with me, right? And but at the same time, she can't show proof of income. She can only show proof of income by bank statements, but they want to see, guess what? Tax returns. Now you can easily say, well, I've only been in business for 3 months, but now you look like an unstable company. So you want to say, hey, I've been in business for 4 years, because she's been in business for 4 years. But now out of those 4 years, they want the most recent 2 tax returns. Now she has nothing. So that plays a role. Mortgages. Now, of course, this person didn't even have taxes, but if you're bringing down your income so low, when you're looking for a home, I have another friend of mine, client actually, trying to get a home, things of that sort, got pre-approved, but her buying power is so much lower than what it could be if she didn't bring her income down so low, trying to have all the deductions, trying to show all the expenses, just to I'm sure, get a refund, right? And there's nothing wrong with getting a refund. You just have to decide, do you want to get like a large refund and then show low income, or if there's a way that you can still show a decent amount of income and still get a little bit of a refund, or just say, you know what? Forget the refund. I need to show this income because I want to get a house. And some people are not in a position to do that. I have, like I talk to barbers all the time. I say, listen, man, if you're making 50,000, you don't have to bring it all the way down to 18,000. Still show something. We need to show some type of income. And, so again, and there's enough usually deductions to go around. You may not necessarily have to pay so much into it as far, if you have, like a refund or something like that, but at the same time, you want to make sure that you have some type of income, some type of paper trail, because you're going to want to progress, especially if you're starting to make a certain amount of money. Usually around 30,000, 40,000, 50,000, people want to get newer cars, a home, a better apartment, or a loan or a student loan or something, right? And you need that income to show. So just be careful, just trying to focus mainly on a large refund. And then again, there's nothing wrong with a refund, but ask yourself, if I get this refund, what am I going to do? Am I going to blow it? Am I going to invest it? Am I going to, use it to buy a home or start a business or whatever? You do whatever you want to do with your money. I'm just saying that make sure you have a paper trail of some income that you're making where it's stable, at least 30 grand, 40 grand, 35,000, somewhere in that range if you can. I would say on the lowest, 25,000, 30,000. But again, not necessarily giving you advice, just giving you an example of what I've seen work in the mortgage industry, personal loan industry, and those loans normally get approved if they have a certain amount of income. So either way, do your thing. If you like this video, like it. If you want to share it, share it. And as always, be sure to subscribe, as we have nothing but great content on the way. Thank you guys so much. Have a great day.